within this time frame is the number of moves we have in a trend, right? So the trend is the most important thing. That's what we're trying to get to whenever we're trading. Whenever I look at the chart, if I can predict the trend, man, I'm not a gambler anymore. That's the difference between a trader and a gambler. A gambler trades sometimes against the trend, sometimes with the trend, but he doesn't know what he's doing. So on a short pullback, he might be going for, a Hail Mary, or he might be going for, an upward volatility move, but we're in a consolidation. You could tell that person doesn't know how to trade. Or, let's say someone sees the chart pumping, right? And they decide, hey, I'm gonna long it right here. Like they open their app and they're like, oh my God, Bitcoin's at 60,000. It's 7:40 p.m. I'm gonna take a long. And then they end up, losing majority of their money on this move. And then they hold it and then they're like, oh man, I think I'm going to go into profit. And then it starts dumping again. But that's the reality. That's what a lot of traders go through. A lot of traders go through this technical analysis paralysis, right? And that's what we're going to learn how to avoid today. So if lesson 3 can have a title, the title is going to be how to find winning setups, how to find the right, like, how do you say this? Well, yeah, how to find the right setup, right? This is the title for lesson 3, finding the right setups. Because when you look at the chart is going to be scary, right? It's going to be like, whoa, a lot has happened in the last few days. A lot has happened, right? There's been a lot of movement, a lot of different things. So what are these different things? Do we need to analyze all of them, right? And I'm here to tell you, you don't. You don't need to analyze all of them. You don't even need to look at majority of the chart. What you need to look at is 2 things: the high time frame and the low time frame. Okay. So whether you're a swing trader, a day trader, whatever trader you are, what are you going to look at? You're going to look at the high time frame, which is the weekly, right? Some people like go to the monthly, but you're trading Bitcoin, so I wouldn't go to the monthly, man. I would go to the weekly. Just stick to the weekly, right? Because if you start going to the monthly, then you're gonna get spooked out. You're gonna be like, oh man, Bitcoin's gonna do a lot of stuff in 2025. But I think 2025 is bullish considering the macro, considering everything. I think Bitcoin is pretty bullish. Like we're not gonna see, you know, anything like crazy below 47. I think we might retest obviously the low here at 48, go probably 47. We'll consolidate around this level, see a little bit of a pullback, and then we'll go higher. And I'll explain why later, but I'm expecting maybe one more wave. Okay. So I think this wave is gonna be, it's not gonna be as crazy as like, 300K. I think maybe like 240K, but one more wave. We need one more wave on Bitcoin, in 2026, hopefully. And that'll be the run that makes us rich. All right. So that's your sauce right there for the start of the call. Um, I'm not logged into really anything. This is just one of my newer laptops because I just moved, so getting everything set up in my new crib. Um, that's the perks of being a trader, man. You get to make a lot of money. So let's start off with our knowledge from our last call. Obviously, we are gonna run through this like we're flash right now, because in the last call we discussed this in detail. So I don't want to waste time going over this again. Okay. But right now we're drawing our trend lines. We're never afraid of extending our trend lines. That's our favorite thing to do, right? But we're gonna do this here. We're gonna use colors to coordinate our trend lines just to be a little bit organized. But this is how we identify the trend. The first thing we're gonna do is analyze, right? The high time frame. So technical analysis is about analyzing the chart. So what are we going to do? We're going to analyze the higher time frame. That means the monthly, okay? Or the weekly. So we started off with the monthly. We found the levels, right? Now, what are we going to do? We're going to remember what we said about our lesson, that when Bitcoin or any asset that we're, analyzing moves within the shape. What is this shape? It's an ascending triangle. So we expect the price to either break out of here or break out of here and give us what? Volatility. Very, very simple. So we are expecting volatility to come. Something will happen soon. Don't be scared. You're not going to be broke for long. Okay? Now, when volatility happens, do we understand which direction it's going? Well, only a cake baker can make a decision like that because he knows how to he knows how to chef it up, right? So if you ask a baker, hey, baker, can you bake me a cake? And this cake will tell you which way it's going, right? To be able to know where the trend is, to be able to know where it's going to break out of this pattern, you have to be able to bake a cake. So what do? We use the ingredients, remember? So now we just use the first ingredient, trend lines. Let's use the second ingredient, right? What are we going to do? Support and resistance. But are we going to do resistance? This is what we're going to learn in this call. We're going to learn that support and resistance are not equal. So you see me, I'm not doing any resistance. I'm just doing the supports, right? So the reason I'm doing the support there is because I'm trying to get the top of the boxes. Remember how we spoke about support boxes? So a support box is essentially it's a box that has a zone that has like how do you say this? Has a pullback and a consolidation on this level before it finds newer highs. And it hasn't crossed those lows yet. That's what makes a support box. Okay, so here we have a support box. Here we have a support box, right? Um, look, I'm trying to get as many of them as possible. You see those red candles here, the bottom ones. We try to get as many as possible in there. So that's what makes a support box. And since this isn't an uptrend, and remember, we went over this in the last call. What an uptrend means is very simple. Oh, where's this shit? An uptrend is what? You have a low, right? You have a high, then you have higher low, then you have a higher high. This is an uptrend. Okay? Very, very simple. Downtrend is what? You have a high, then you low, then you have a lower high, then you have a lower low. You see that? That's a downtrend. Very, very simple. Like the terminology is key because when you're applying it to analyze a new chart, you have to know what the hell's going on. So we had the first low here up to the high. Boom. Then what? A lower. Sorry, this is a low. So it's a higher low because it's higher than the last low. This is the last low. It's higher than that, right? And you could see here, if you look at the chart in more in detail, this was the low as well. So when it came back down here, this is a higher low. So the uptrend continued. You see, the price formed a high here. It went back down, right? Got into the support zone, but because on the higher time frame it formed what? From the low, a high, and then a higher low, then I knew it was time to long because it's already in an uptrend. It's already in an uptrend. So just knowing this basic definition of higher lows and higher highs, knowing where the trend is going can give you a very, very easy confirmation that this is going in this direction. And when you take a trade off of support during an uptrend, that is a guaranteed trade. That trade is going to hit, bro. Like you could literally see here, it predicted to go up off of this support zone in an uptrend. It's already in an uptrend. It formed a high and then a higher low. So a higher low formation is a sign that there's an uptrend, right? A lower low or a lower high is a sign that there's a downtrend. So let's see how that applies. So now here, price went up, we closed. Let's say we took a trade, at the formation of a double top pattern. So we have here, okay, I think a double top pattern is going to happen. So I enter at the swing highs. So the swing highs, what does it mean? The swing highs just means that there's somebody here, right, that's doing what? That's selling. So somebody here sold. Now, if we come back to this area, what's likely going to happen? Someone is going to sell again. So that's why people sell at the swing highs. This is a popular thing. Whenever you come back to a swing high, remember this for the rest of your life. Whenever the price comes back to swing high, that's when you sell, bro. Always get out. This is one of my biggest rules that I've created recently for myself. Sell at the recent highs. Always sell at the recent highs. That means the swing highs. So all the swing traders, they're going to be like, oh my God, we're reaching a new high, our previous high, right? Because this is on the high time frame. So all the swing traders are going to say what? Price is reaching the last high. This is your sign to get out. And in crypto, it works wonders. Just get out, man. We're getting next to recent high, get out. And then what? Figure out what the trend is going to be. So when you get out, you could short. You could be like, all right, I'm a short with a stop loss, okay, above the recent highs. And we're gonna go over a strategy on how to find that distance between the recent highs and where you should put your stop loss, okay? Because you should never put your stop loss right at the highs or the lows of a candle. Never do that. That's the biggest mistake I used to do, okay? So now that we've learned all of this, now that I've told you all of this, okay, let's apply something. We are analyzing the high time frame right now. The high time frame analysis on Bitcoin, okay, live. But we are analyzing which year? We're analyzing 2021. What happened in 2021? We got a double top formation, right? The popular McDonald's sign. The double top formation that's going to send everyone back to McDonald's. All right. This pattern is very famous in crypto. Double top always happens. It's always brutal, but we don't trade the break of the pattern. We trade the pattern itself. So last call we said patterns are very important, right? So when I see this pattern forming, like I see this forming and I see it approaching the recent high, and I see the low was at the last low, right? I see it forming this M. I'm like, let me grab a short up here. Let me grab a short back down here. So I'm shorting with the pattern. The pattern itself is complete now. So I get out. The double top form. This is very popular in crypto. Like you could even see it here, right? Green candles, red candles started forming. You short. So easy. And then you get out. The moment you start seeing, like a bounce on the support, on the previous support. So now that we're looking at Bitcoin from these aspects, from patterns, we're trying to find patterns. The price moves within the shape, right? We are going to see volatility. It's respecting support levels. We're seeing a lot of candles that are actually giving us a trend. How can we use this information to now find the winning setup? Okay. Let him cook. This is where I start to cook, okay? This is where you're not going to learn this from a lot of people. A lot of people don't have the balls to tell you this, but it's all about timing. So, right now might not be the best fucking time to trade, but it might be a great time to do what? To set alerts, okay? And in this lesson, we're going to talk about a few things. We're going to talk about how to choose the right technical analysis setup for your trading style. whether you're a swing trader or you're a day trader, you have to have a set of guidelines, right? Like, you know how like a baker has like the time he puts something in the oven and stuff like that? You have to bake your cake for a certain amount of time. And this idea that we started with today has to cook for a little bit. Okay. So you have to let your idea cook. You can't just say, okay, I opened a chart today at September 15 on the high time frame, and I'm going to make a trade based on just the high time frame. I'm going to open trades today. No, you can't do that, right? The second step of what we're going to do today is actually going over the lower time frame as well. So let's do that real quick. So the lower time frame, right, is the second part of this equation. And once we have both parts done, right, using all the cake ingredients, we have to let the idea cook. So let's finish up the lower time frame real quick, and let's let this idea cook. Because today, I'm a day trader. I want to take a day trade for tomorrow, and I want to know what the hell's going on in the market. Now, obviously, we're seeing something that happened in the market earlier, right? What happened in the market earlier? Well, on the weekly, we saw that in 2021, after the double top formation, we got a breakdown. So let's just keep that in mind. Let's keep that price behavior in mind. And this is the sauce I'm going to teach you guys. When you look at the high time frame and you see certain patterns playing out, remember that. Remember that this is how this coin behaves. Remember that when a double top happens on Bitcoin, we get a small bounce up to the last resistance and then a breakdown to support levels. Remember that. Just remember that, okay? Remember what I just said, because when we go on the short time frame, you're gonna see some stuff happening. You're gonna see some wonders, and this is the secret, okay, that I call the secret of fractals. When it comes to trading the markets right now, in a time where not a lot of rich people are being produced around the world, right? That amount is slowing down. Yes, there's a lot of rich people, being born and stuff like that, and people inheriting stuff, but the gap between rich people and poor people is actually becoming bigger and bigger and bigger. So we're seeing we're living in a time where we're seeing the markets act very similar to how they used to in the past, because the traders are not really different. It's the same people, and they're trading with the same psychology. And a lot of people don't change. The reality is people don't change. That's the reality, right? A lot of people, when they get addicted, they have habits, they have certain things, they start to make money, whatever. They live in certain countries, right, under a certain schedule. They don't change, right? Everybody pays taxes a certain time of the year. Everybody does certain things. Everybody goes out on the weekends. Most people work, right? So you got to take into account these things when you're trading crypto. You have to understand what the hell's going on in the world today. So let me tell you what's going on in the world today so you don't have to ever do this again. Well, today there's a lot of repetitive action. Okay. We're in the market of repetition. I think from now until the next 15 years, we're gonna be seeing repetition, repetition, repetition. What does that mean? That means that the government might likely is gonna print more money, and then we're likely going to see more pumps. S&P 5, everything's gonna pump to all-time high. We're gonna keep seeing all-time high for the next 10 years, 15 years, right? Just exhausting that like psychological like gasping and sigh of relief, gasping and then sigh of relief, like bull and bear market for the next 15 years. I think that's what's going to happen, right? We might get in Trump as president per se, and then another exciting person, and then another exciting person. This always happens, in US politics, in the matrix that we live in today that's controlled by rich people. This always happens. This is what they do to keep you engaged. But the trend has been just sending everything to all-time high, all-time high, all-time high. So don't believe the bullshit of a crash. Don't believe that nonsense, right? We trade on realism, and this realism comes with superpowers. So what are these superpowers? The superpowers is that when we have these thoughts, can help us be more successful and confident when we're doing technical analysis. So now that I'm over with my rant, let's go back into the lesson. Okay. Because I'm trying to give you guys as much information with the time that we have together, but it's gonna be hard for me to just like break it down in sequence or like in class form when it's just like sauce, bro. Like I'm just giving you sauce. I'm not trying to give you stuff that, someone is like taking notes of and like really learning. Look, I want you to remember, look, yo, Junior said this, and this is why I'm gonna take a trade based on that. Junior said that when the price behaves a certain way on patterns on a higher time frame, it's likely to behave like that on lower time frame. Okay. How do we apply that right now? Well, if you look at the chart, you're gonna see this famous McDonald's logo forming, right? And what did we see on higher time frame? It did a little bounce and then it made a move even lower. So let's expect that is gonna happen. Let's just say that is the sauce, and that's how we're gonna trade. All right. All I have to do is wait 3 days and see if this idea is valid. Like, this is how you cook, bro. You cook by taking an idea down, you draw it on a chart, right? So you roughly draw the setup of what's going to happen and you let it cook. And this is how I find my setups. Finding setups is not done by sitting there and fucking drawing support lines and saying, buddy, I have all the support lines drawn out. I'm a fucking G. Like, no, buddy, you're not. You're a fucking dweeb, bro. Because when you draw support lines, you're actually giving yourself analysis paralysis, right? You're drawing support, you're drawing resistance, you're drawing all these things, right? Like, look at one of my charts, bro. This is when I open this chart, I feel like a dweeb, bro. Because this chart is crazy. It's obviously I'm not drawing support and resistance on this, right? Like you can see here, I literally have how many horizontal lines? I have one, two, three, four, and like maybe like 5, 6, 7. Like obviously there's a bunch of them, but it's not crazy. It's not like a crazy amount, right? I know some people, bro, they have like 20, 30 support lines on their chart, and it actually makes me go crazy. Like this shit makes me go crazy, right? So when I simplify, when I open a new chart, that's like the most refreshing feeling in the world. You just open a new chart and you say, what I'm gonna draw is the least amount of, right? Uh, these are some notes from the other class. The least amount of lines, right? Because the whole fucking point of technical analysis is being able to say boom, 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 boom. Like that is the point of technical analysis, like being confident to do that and be like, this is what's going to happen. And then what do you say? You're like, here, you can confirm my strategy because boom, you got, 3 lines here. So if we form the low here on this trend line and it picks up at this point, then this could be a breakdown. This could be this could be a point of support, a point of like potential support here, right? A rectangle could form here. This could be something that, becomes a buy zone for Bitcoin. Like, oh my God, Bitcoin is like a golden zone for here. So, like, the whole purpose of technical analysis is so you could be so simple with it. Like, you see how fast I did this shit? This is just one idea, but I think my intuition came up with this idea because I've trained myself to look at this pair so many times on a lower time frame. Okay. So what does that mean? That means that you want to be good at charting something, you have to what? You have to do daily analysis. Okay? So if you're doing daily analysis on a coin, that means analyzing high time frame with low time frame every day, right? Finding correlations between each winning setup that worked on high time frame and low time frame, right? And then what's the situation here? My bad, guys. So we got this coin right here. All right. Bitcoin, one of the most popular coins. It's clearly the hot topic in crypto. Everything moves behind it. So when we analyze this coin, it's going to give us a lot of knowledge on other coins. So analyzing Bitcoin teaches us about the entire crypto market, right? So daily analysis on a coin in crypto, right? You have to do analysis on Bitcoin to understand where it's going. So to find where a coin is going, this is what we do. Okay. We analyze high time frame, low time frame every day. All right. We find correlations between each winning setup that worked on high time frame and low time frame. So, for example, we saw on the other chart right earlier that there was a double top that had a little bit of relief, and then it completely formed the same amount of volume from the double top. So that was a winning setup. It's very simple, right? It doesn't have to be a complex freaking analysis, dude. Very simple. You see the pattern forming, bro, you just take the trade, right? It's on high time frame. So if I'm thinking of selling Bitcoin or thinking of buying Bitcoin, I would use the high time frame strategy, right? But most times you're not going to be able to have a good high time frame strategy if you're not already trading on low time frame. Because if you're only trading Bitcoin like once a year, you're not a good trader, bro. I'm sorry. Like, I'm sorry to tell you, you're a fucking clown. If you're trading Bitcoin once a year and you're telling me you understand Bitcoin. No, the person who trades Bitcoin every single day understands Bitcoin, right? Because he's looking at more than just the trend. He's looking at the price behavior, right? And that's what I can't give you, man. I can't teach you about price behavior, bro. If I sat here and taught you about price behavior, oh my God, we would be tripping on acid. Like that's literally the definition of that because everyone has a different understanding of life, right? Everyone has a different time that they trade. Everyone has a different lifestyle, right? If I come and try to teach you about life and I tell you this is how you should live your life, and this is what you should do, and this is how you should do things, you're never gonna enjoy me. You're never gonna enjoy my company. You're gonna be like, bro, this guy's trying to force me to live my life a specific way. It's your life, right? So if you want to be successful, you got to be happy. You got to be content. You got to be satisfied. You're never going to be satisfied if you just trade like once a year and you call yourself a trader. Like, no, you have to get in the mud. Like, I'm teaching you this stuff so you can go and trade yourself. So you can go and analyze the 1 minute chart. So you can go and take trades with a couple dollars and see what do your strategies work, right? Because the whole point of being a trader is not to just like make a ton of money. It's no, to have a good winning strategy that other people can copy. That is the point of trading. The point of trading is to find the right winning setups. And based on those setups, if you take a setup long enough, then you have a winning strategy. So in the next calls, okay, we're going to be discussing these winning strategies. We're going to be discussing who are these people who won, right, over time, and what are their strategies, and what have they paid attention to in the markets? What has made them rich? One thing we got like is Elliott wave theory, right? We got the Fibonacci levels. Uh, Obviously, that's a very popular one for take profit strategies, right? So there are strategies across the board. There are entry strategies. There are winning setup strategies. So like not just like when to enter, but like the best strategies to like get big gains, like knowing when a trade's gonna hit big, right? Uh, So an Elliott wave theory, an example of that would be like uh longing the support on the beginning of an impulse wave. Okay. And we're gonna get into that in the next call, but I just want to show you guys that this is possible. Like trading profitably is possible. It's not impossible, guys. Like it is possible. Like if you don't take losing trades, if you don't trade like a monkey and you trade like a human being, then guess what? You're actually likely to make a lot of money. And right now, the reason I don't go all in on every trade, right? And the reason I don't risk a lot of money, like I know a lot of people around the world, they want to see me risk money, right? They want to see me risk like 5 grand in an account, like turn that account to 50 grand or 100 grand. Because a lot of you guys want to do that. I understand that. I understand that is the whole purpose of why people watch traders. But that's not the reality, man. The reality is that, you live in a world created by God. And God created this world. None of us humans created it, right? So someone created it other than humans. That creator, right, provides for everything. Provides for the animals, provides for the fish, provides, there's a cycle. And that cycle is what revolves around eating each other, right? So everything eats each other. So in trading, we are just in that cycle. We're eating each other. Everyone's eating each other. So you have to find opportunities where you can eat a lot. Remember how I told you, like, you go to the river and you put the bucket where the river flows the most? Well, that is going to be blood, man. It's not going to be water. Okay. Unfortunately, this is how trading is. This is the reality of trading. So if you're scared of trading now is probably the time to leave. Now is probably the time to stop, right? And just kind of move on with your life. But this is trading. Trading is we make money off the blood of people, right? And other people have to lose for you to win. Because there's either the bigger fool theory, which is the bigger fool theory is like, you create something that idiots use that makes you money, right? Like uh, a casino or a bar, right? Alcohol or a dispensary with weed, something that you can just keep sourcing and people will pay you for that. Like plastic, like people consuming plastic. Like those are all industries that satisfy the bigger fool theory, right? People use plastic regardless of how it harms their bodies and shortens their lifespan. And companies make money. People drink alcohol not knowing that alcohol can be produced by just fermenting anything, and they pay big money for it, right? Or people like smoke weed and they don't know that that can be grown. So those are bigger fool theory. Or like someone creates a crypto coin and then tells people to buy it. Like what's the point? What's the point of buying it? Oh, I'm gonna make more money. You're promising me more money. Go fuck yourself. And that's why I told you guys in the first lesson not to buy the S&P 500 because that's literally the same thing. It's a Ponzi scheme. It's a bigger fool theory. When you buy into stuff, you are the bigger fool. They're making money off of you because you're a fool. They are smarter than you, so now you're a fool that they are making money off of. Okay, this is one of the ways. So when someone makes money on the way up, that is because there are bigger fools than him that are buying. Okay, and how are they fools? Because you could just sell and nothing is holding you back. That's why in stocks, the stock market is regulated because us fools that are born in the 2000s, whatever, we're young, we are going to buy the stock market at prices that are so high that someone in the 1970s would never buy at these prices. They would be like, bro, this is ridiculous. I would never buy this price at this coin at this price. So that's the bigger fool theory. Is like the fool today is gonna be like, oh my God, Bitcoin at 50,000 is such a discount. And the guy who bought it at $1 is looking like, fuck, man. I don't think Bitcoin at 60,000 is a good buy. But when you look at the asset, Bitcoin, the guy who bought it at $1 is still telling you to buy. So that means that it's a good asset. That means that this bigger fool theory applies to everybody equally on Bitcoin. Like the guy who bought it at $1 still thinks it's going to go up. So everyone who bought this is a fool. That makes it a good thing, right? And that's when like everything goes up. Like the United States, like S&P 500 has been going up for how long? Or gold has been going up for how long, right? But who's been eating shit? Who's the biggest fool of them all? Is the one who's holding the US dollar and saving it, right? Saving it. Saving meaning putting in the bank. So the opposite of a trader is someone who saves, right? If you remove consumerism from your life, the opposite of someone who saves money is a trader, someone who takes their money. So you earned $100, you take that money and you go and you hunt. You hunt with that money. You put that money to work and you risk it to hunt others, right? And this is what trading is. Trading is the opposite of saving. Now, like I said, there's the bigger fool theory, right? So if you get into trading anything, you're gonna have to realize the only way you make money is if someone that's dumber than you gets in and makes a stupid move. So now that that's established, let's talk about the next one. What's the next one? The next one is when the price is going down and you have the opportunity to eat from the blood, profit from the blood. And this is what I told you guys in the beginning of the lesson. In the first call, right? I said what? What did I say in the first call? I said if you take a bucket and you go to a river, the way you make money is by putting that bucket where the river flows. So it's like effortless. Your bucket fills up fully, quickly, right? That's a win. If you waste time, you're not going to be able to take as much water as you want, right? You're going to struggle. Making money is the same way. It needs to be effortless. It needs to be easy. All your trades need to be easy. You just put your bucket there, fills it up quickly. Boom, you take it out. Yes, you got water. That's literally how trading should feel like. Trading should not feel like, fuck, I got my bucket. It's sitting there and I'm waiting for the water to fill up, you know? And that's why I actually, I'm going to talk about Involio and a bunch of different stuff in a little bit about winning setups, but this is why I actually don't like just trading in public without explaining anything, right? All right, let's just close this trade here. Let's just close this trade here. Just to show you guys that, you know, it's all about quick and harmony, right? It's about quick moves. So let's close this here. I'm gonna close it. Give me 1 second. Because one of my rules is like I don't like to have trades open when I'm not looking at the chart. So just based off of this lesson, like it's probably gonna run until like another hour and a half. I'm not gonna be able to look at this. So there you guys go. And I'm about to teach you one of my rules right now because this is just straight sauce. I'm just dropping all the sauce, right? We can organize it later in the notes. We can, do these lessons more often. I could redo these lessons, but just let me drop my sauce real quick. So when I'm trading a chart, how do I find a winning setup? We just talked about the purpose of technical analysis is what? What's the purpose of knowing support, resistance, higher time frame, lower time frame, being able to identify pattern shapes like, boom, this is a pattern shape. All right. What's the purpose of knowing this? What's the purpose? What's the purpose? So you can predict where the price is going to go. All right. How do we find a winning setup? So how do we find a good prediction for price? How do we find a good prediction? Is this a good prediction? I say it is, right? Why? Because right now we are currently, right, following a trend that started when? That started somewhere around like 2023, January 2023. So this trend started around here. And we're still following that trend, right? Boom, you got one trend touch here, one trend touch here. So this is pretty much the most accurate trend right now. Like when you look at the price that where it's been moving, right? It's been moving or on this trend. Like it's been moving, it's been bouncing off this line. So that's kind of like our favorite trend to use, right? If I used like the low from here, then it wouldn't make sense. I'll be one of those slow guys, one of those slow guys that's like, oh man, Bitcoin is moving, in a channel, and I think Bitcoin will go, extremely low. Okay, maybe, maybe he's right. Maybe this is another setup. Maybe this is another shape. Maybe this is the trend shape that we should use, and the price is going to go this low and it's going to come back up here. Well, I'm not really interested in that because guess what? Guess what? If Trump wins the goddamn elections, okay, this shit's not going to happen, bro. Because this right here is telling me that we're going to have like some nuke until 40K and we're going to reverse around February after dipping to a 33K low. That could be a possibility. That could also be a possibility. You see, because I'm able to draw it out and have this conversation with myself, then I can write some notes down and say, you know what? The second trend shape that I chose actually shows the same kind of idea for me, but a little bit more aggressive on the downside. So I take these notes down. I'm writing notes down right now, right? So the second trend shape that appears, right, confirms the downward move that I'm expecting because the price moves within the shape. Remember that. The price moves within what? The shape. So we're literally just using the knowledge that we've learned. So the price moves within the shape. Awesome. So now the price is gonna, if it bounced off the first trend line up here, it's likely gonna bounce off the second trend line, right? So that's what moving within the shape means, man. It's moving within the shape. We learned this, right? Junior taught you this. Junior taught you that the price is likely to move within the shape and it's likely to respect, right? Bouncing off support and resistance within the shape. So here you have a bounce, right? Here you have a bounce, right? Here you have a bounce. Here you have a bounce. So now the last thing that is relative to the price that we're in right now is that there was a bounce off the what? Off the top trend line. Okay. Let's write that down. Bounce off trend line, right? Where on resistance level 72K. Okay. And this is my BTC analysis. So whenever I want to trade BTC, I'll open my analysis notes. Okay. And I'll open this page, and this will be the page for my BTC trades. So this is the high time frame analysis. Okay, remember, there's two steps to this: the high time frame and the low time frame. The high time frame, you do it no matter what, no matter who you are, no matter what your name is, no matter what country you're in, no matter how many hours you're awake for the day, you always do the high time frame. Okay, this is the distinction. The big distinction when you're doing technical analysis, no matter who you are, you always do the high time frame. Always, 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 always. Always, bro. Otherwise, you're a fucking blind idiot. You're a clown, right? You're somebody who doesn't know anything about anything and you're just blindly trading. Like you're literally a blind clown. You're someone who doesn't know what's going on in life and you think you've got it figured out, but you've never left your city. Like you've never seen how other countries work, how other laws function, and are they better or not? You've never seen other simulations other than yours, you know? Each governor, each president in each country simulates the outcome over the years by putting different laws and different stuff, and they're all controlling the simulation a little bit, right? But you got to break out of this mindset. You can't be within any simulation. To be a day trader, you want to be remote. You want to be able to travel in any country. You want to be able to just use any device, right? You're not locked into fucking your computer at home. Bro, give me any laptop, bro. I'll open TradingView right now. I'll analyze any market. Let's take some trades. Let's go. Let's fucking get rich. That's what a trader is. And I hope that motivates you guys because that's literally what I do in my life. Like, I just open a chart. I'm like, holy shit, let's get rich. So, how do we do that? We analyze every pair, right? This is what the pair is, BTC against USD on a macro, right, level using the high time frame. But remember, the distinction between the two ideas that I just made the trend shape that I chose, which is a rectangle, and the other one that I chose, right? So this is the rectangle. I'm going to delete this line. This is the rectangle. You see it, right? I'm going to bring that line back. Delete this line. This is the triangle. You see it. But which one is the correct one, right? Just because I know, and I'm personally, I'm taking this bet. I know that Trump is going to win the election. The more bearish downside thing is not going to be the option. I don't want to choose that option because that would make me stupid. That would make me too bearish during what? During a time where we could potentially get a break out of 77K zone up to the 200K upside, and everything would explode at that point. Everything in the world, bro. When Trump gets into US presidency, and I've done this study and I've wrote some articles about this, but Trump winning the election would explode the US economy right now. It would explode it. Trump released one of the biggest projects during the bear market. He released his NFT collection, sold like I think $7 million in like 40 minutes during the bear market, like 2022 bear market. And then he also did a huge run with Matic, Ethereum, like profited massively. Nobody knows this, but like Trump fans know this. Like they know that he's in crypto heavy, right? He's also very, very, very deep, deep into Bitcoin. Like he's deep into Bitcoin, like relationship wise with a lot of his friends are in Bitcoin. Like a lot of his friends are relying and putting their money into Bitcoin. They're trusting him. His fans are trusting him. So he's very deep into it. That means that when he gets into office, he's going to help it a lot. You know, like the United States is the only missing piece right now for crypto to hit its peak. Like for crypto to be the peak Ponzi scheme in the world, the US has to get in on it. Right now, you have El Salvador, you have a bunch of countries buying it. But the moment that the United States gets in on it, game over, baby. We have the best bull run. We have the bull run that we've all been waiting for, that we've all been promised, and that's it. The game is over. Once that's done, the excitement, the opportunity to get rich, trading is going to become boring after that. Okay. So this is why I'm doing this right now. I'm trying to teach you this before the bull run comes so you could change your family's life, right? So you can be a legend, bro. So you can be someone who made it, bro. Like, you don't want to be that fucking loser that's like, fuck, bro, I missed the bull run. Like the one I've been waiting for. Like, I missed it. Like, you're gonna look your kid in the fucking eye and you're gonna tell them, daddy, like mommy or daddy, whatever. Like, if you're a girl, if you're a guy, you're gonna tell your kid that you failed them. You can't buy them whatever they want. You can't pay for their fucking school because you missed out on the bull run, because you fucked up. You couldn't become a good trader in enough time and shine within the crowd with your technical analysis, and you didn't make it. You didn't make it because you were a fucking failure. Like, I don't want that to be your reality, bro. So that's why I'm teaching you this stuff today. All right. I'm teaching you this stuff so you don't have to open your app anymore and start fucking jittering and like shaking in your pants, like waiting for a trade. Dude, that's not how we do this shit. The way we do it is we open Involio, we open TradingView, and we start cooking, right? You got to let it cook. You got to be patient, bro. The next 4 days are the best 4 days of your life, because if your strategy cooks, do you know what that means, bro? That means that your strategy is probably going to work for like 6 months before it like fucking stops working. Okay. Strategies on average in the trading industry, they last from 4 months to 6 months. It takes like about a quarter and a half for like people to start catching up to you. If you become a very successful trader, you're making a lot of money, you're flipping accounts, you're like growing your balance. 4 to 6 months, bro. One strategy. 4 to 6 months, then it stops working, then it works again. That's why we get cycles, right? We get mini cycles because some people start to trade strategies, they blow accounts with those strategies, and then new people come in and so on, right? So I'm not going to explain that too in depth right now, but 4 to 6 months, that's how long a strategy works. So if you find a strategy that works for you today, right now, on average, it's probably going to last you for the next 6 months. If it works today, then it's probably going to work 6 months from now. And if 6 months it still works, then you could like be safe to know that it's probably going to work for some couple months more, right? So if your strategy works today, it's safe to say that it's going to work for the next 6 months until something big happens and changes in the world. Okay. So Now, when we look at our strategy from the last year, based on what I just said, last year, September 2023, so that's 2 cycles, right? That's 2 6-month periods. So we got one right here, and we got one right here. So the first period, okay, was what? Like a hook, right? Like a candy cane. It was nice. Then the second one was also a candy cane. But now we have a consolidation and we have a retest of the high. But do you think this is going to break below? No, I don't think so. Why? Because we're in an uptrend. Okay? We are in an uptrend. So the last 6 months, we were in an uptrend. We're still in an uptrend. The last 6 months before that, we were in an uptrend. So the previous 2 periods are what? Are bullish uptrends. So we wrote a few things down for the high time frame. We wrote recent trend shape that appears confirms the downward move. Okay. Bounce off trend line on resistance level 72K. 4 to 6 months prior is bullish. Previous 2 periods are bullish uptrends. Okay. So what does this mean? This means that most likely, we're going to get a bullish uptrend because the market, what did I say early in the call? The market is repetitive right now. Repeats. So bullish uptrend, we're likely to be, again, in a bullish uptrend. All right. Combine that with Trump winning the US election. Okay. Considering now geopolitics and the US economy are like the 2 things that are like strangleholding the world right now. They're like strangling the world, right? US politics and US economy. Okay, the US dollar. What the hell's happening with the US dollar? Are they going to print more money? Are you going to be able to pay their debts? What's going on? These are 2 things that if you're a human being and you're not a freaking robot, you'll be aware of those things. So US politics, is that bullish in the next 6 months? Yes. US economy, is that bullish in the next 6 months? Yes. Because what did we say earlier? We said that the US economy pumps to all-time high. That's literally what it's been doing. And the market has been repetitive. So pumps to all-time high, that's going to be a cycle that repeats until what? Until something big changes with the world, which is not likely going to happen anytime soon. Okay? Because the rich people, what are they doing? They're chilling, bro. Nobody's touching rich people. Rich people are not dying. Rich people are not being affected. So the world is completely fine, right? You don't judge the world by how poor people are suffering. No, you judge the world when rich people start to suffer. Then you say the world's going to a bad place. But rich people are not suffering yet. Okay, so the U.S. economy, it's pumping to all-time highs. That's a cycle that's going to repeat itself based on the logic that we just learned. Okay, U.S. politics is what is bullish. Yes, because Trump is getting into office, and Trump is a celebrity, he's a social media celebrity. He's shaking up the entire internet, right? Look at how Trump is. Trump is one of the Trump is the most famous man in the world right now. He just got shot, right? Today or something. So Trump is very bullish for crypto. US economy, very bullish for crypto. These are the 2 things that run the world right now. This is what macro politics revolves around. Okay. So based on this information alone that we have, this can give you some sort of hope that Bitcoin is still bullish, right? Because you might see posts online, you might see people crying, you might see people bitching, you might see people whatever saying whatever they want about Bitcoin, but in reality, Bitcoin is looking very good. And it's very important to know this, guys. Like, it's very important to like be confident of this fact because If you're not confident of this fact, then you're not an expert. You're not an expert in anything. You don't know anything about life. Because if you don't know about Bitcoin, you don't know about crypto technology, you don't know about digital currency, right? And what centralized digital currency means and what decentralized digital currency means. If you don't know the difference, then you're cooked. You're cooked. In life, you're cooked. You will never be able to achieve financial freedom. You will never be able to save your family from becoming slaves. You might end up being a slave your entire life. Okay? So let's run through that real quick. I know we got kind of trailed off in the session, but let's focus on the difference between centralized and decentralized. Because I don't want you to be poor, man. All right. Decentralized means nobody owns the majority. Centralized means someone owns the majority. So which one is good? Which one is bad? If you were to choose to invest in something, which one would you choose? Would you choose like a decentralized where nobody owns the majority, or would you choose a centralized where someone owns the majority? Right? Centralized means you are owned by someone, because if your entire life depends on this thing, you are literally dependent on someone, right? But decentralized, nobody owns it. So nobody owns you. And even if your life depends on it, the whole world has to be destroyed for you to lose. Do you see what I mean? Is this easy to understand? Because the difference between centralized and decentralized is like uh let me ask you questions, okay? I'm gonna ask you guys a question and you can type it in the chat. Okay? Let's do an exercise. All right. Is gold centralized or decentralized? Is it decentralized or centralized? Because if it's decentralized, that means that nobody owns the majority of all the gold in the world. But if it's centralized, that means that somebody owns the majority of the gold in the world. So is it centralized or decentralized? Gold is a natural resource, right? So the majority of it is in the earth. If the majority of it is in the earth, and the earth isn't a person, so nobody owns the majority of gold. That means that what? It's decentralized, right? Forget about like the people owning the gold. Forget about that. Forget about people, okay, owning gold, like humans. Who owns gold? Nobody owns gold. Gold is produced by the earth, right? But like gold was made. There's like a composition to it. But can you recreate gold? No, you can't. You can't recreate natural gold. That's one thing that nobody can make. You can't. You can't make gold. Okay? So what does that mean? That means that there's a limited amount of it. It only exists in nature, and nobody owns the majority of it. Like nobody has taken all the gold and says, "This is I own gold. Gold is my asset." Okay? But when you start to like look at the Federal Reserve and you start to see all the banks that hold the gold and like humans, the people, the regular people don't have the majority of the gold, and the gold is controlled by what? The big banks and the big people. You will start to say, oh my God, gold is becoming centralized. Gold is becoming centralized. Gold is not reliable anymore. They took over gold. They own all the mines. A regular person can't just go and get gold. Okay. Okay, now what? We're in a predicament because gold used to be the only decentralized thing that people relied on, that people, relied on for money and to hold as a store of value. So that, for example, like if you want to give your grandkids some money, you don't give them a dollar because they're gonna go spend that. You want your grandkids to save money, but when you're thinking of saving, you have to think of store of value. So what's the best thing that stores a value? Maybe okay, a car, a classic car. Some cars go from 30,000 to 400,000. Tesla Cybertruck, for example, those keep going up in price value. But once they start getting mass produced, their price is going to go down again. So you have to be aware of the supply. So right now, if you have like a gold bar, right? You know that your neighbor is not going to go and make any gold. He's not going to find any gold. So that gold is valuable. It's unique, it's rare, and it has a certain value. So if you gave it to your kid can save that, and 20 years down the line, he have that money and it'll be worth more than what you gave it to him. So that means it has a positive story value, right? And that means that it can be passed down to your kid easily and given to them so that 20, 30, 40 years down the line, they have this money that you wanted them to save. You're helping your kids become wealthier, right? Because what you become wealthier when you save more money, but you don't want to save money as a trader, right? As a trader, we're not saving money. We're doing the opposite. But what happens when you're done trading? What happens when you're past trading? Right? What happens when you get past that point where you don't need to trade anymore? You don't need that money. You know, you're holding like stuff. You live in the greatest country in the world. You live in under the best system. You own real estate. You don't need to trade anymore. What happens? Okay? What happens? What happens then? Okay? Because you have to ask yourself, like, if I'm giving money to my family, if I'm teaching my family how to save, okay, I'll trade for money, I'll give you money, but don't go and waste it. Save it so that we can grow and become rich as a family. What's the main thing that you're going to give them? And this is what we're trying to figure out here. A lot of people around the world right now don't know what they're going to give to their kids 20, 30, 40 years down the line. And Bitcoin is like coming up as the asset that people want to give down and pass down to their kids because everything is starting to live on the internet, right? But Bitcoin is facing a lot of challenges legally. It's facing a lot of challenges. So by knowing these macro things about Bitcoin, okay, it makes it very easy to trade. Okay, Bitcoin is bullish right now. So that means that I'm likely to avoid any downtrend. If the price goes below this low, right? Because you can see here, okay, it formed another wave, another wave down, another wave up. Okay, based on this wave, based on this high here, this is lower than the previous high. And this low here is lower than the previous low. So on a smaller time frame, on the smaller candles, right? On this small area here, we're seeing a downtrend. So someone right now may be saying, fuck, Bitcoin's so bullish. Dude, Bitcoin's gonna go to zero. Like, sure, that's a possibility. It could. It could very well. We are currently in that state of mind. But when you zoom out on the higher time frame, we're in a bullish uptrend because the price hasn't broken down below 48K yet. So as long as the price of Bitcoin is above 48K, okay? As long as the price is above this level, as long as it doesn't go below, right? As long as the price is above 46K, then I'm going to be long and bullish on Bitcoin. That's it. That is my high time frame technical analysis. So the purpose of this technical analysis is to find out that above 48K, I am bullish on Bitcoin. Because staying above 48K will preserve the uptrend on high time frame. So the most likely winning setup on Bitcoin is, okay, and I'm writing this down, so I hope you guys are writing this down too. The most likely winning setup on Bitcoin as of September 15, 2024 is what? longing off the support. Okay. Now, we got this on the high time frame. Let's do the low time frame quickly. Okay. Just so we can run through the other parts of the call. I hope you guys understand the decentralized and centralized stuff, but let's do a lower time frame. Let's choose 15-minute. Okay. How do you clear the chart? Okay, let's clear the chart. Wait a second. Now go to the lower time frame. Let's say I want to take a trade for the next 24 hours. So that means that today is 11 p.m. I want to take a trade until 11 p.m. So around here. Okay. And then I'm going to put another one for 1 week. So that'll be the 22nd, but let's just do it right here. Let's just do the 21st. So around 5 days. Okay. Like 5 days. So you got 1 day. Okay. And we got 5 days. So on lower time frame, I usually like to predict up to 1 day and up to 5 days. Yeah. So every time I'm trading a pair, whether it's NASDAQ, whether it's SPX, whether it's USD, JPY, whether it's whatever, I do this. I do this all the time. I do the higher time frame and the lower time frame analysis. Okay. Lower time frame, what does that mean? That means that, okay, we're finding the support here. We obviously have some sort of support here. We have one more support here, and then probably like another support here. Okay, right around there. So these are the 3 support levels. They can be horizontal lines, but I'm just keeping them horizontal rays, which means that you're not seeing the left side of the line, just for the sake of doing a low time frame. Okay, whenever we do a low time frame, you want to focus on where the price is going in the future. Don't worry about the previous. Okay. So low time frame, we're kind of seeing where the trend is going. Okay. For the day, we can see it's strongly rejected off this top resistance here. Okay. And I'm going to be looking, remember, what did I say? I'm going to be looking for long off support. Remember, that's literally what the high time frame strategy is. It's bullish uptrend. So you want to be looking for long off support. That's kind of like what we want to be looking for, okay? So when you get these kind of strong reactions off resistance, you're like, oh shit. Like this is crazy. This is a strong rejection off of resistance. It's a strong bounce, right? On the low time frame, on a 15-minute time frame, like how many candles has it been, bro? It's been a strong bounce, and that's based on how many red candles you've got, right? So let's say we bring this line back down here just to respect the bounce level. You got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31. So around 30 to 32, 15-minute intervals. So the previous day, so we wrote down 1 day, we wrote 5 days, and then we'll write down previous day. So previous day, okay, is literally consolidation plus 30 to 32 intervals move from resistance. So this is the average wavelength from resistance right now. Very, very strong. This is like actually insane, right? That means that we're like extremely volatile on the 15-minute. Now, is there anything that's gonna come and like match this energy? Well, you have to look at what was the previous biggest move. If the previous biggest move was like kind of like opposite of what just happened, then you have nothing to worry about. Okay. So within not the previous day, but previous 5 days, okay, we have a move that cancels out previous day move. So we don't have to worry about the previous day anymore. Okay. And we are in the previous 5 days is what? It's an uptrend. So the last move from the previous day was a downtrend. The previous 5 days, we've been in an uptrend. So now, this is literally how easy it is. Okay, guys? The previous day was a downtrend. The previous 5 days was an uptrend. So, just like I said, the market is repetitive. Okay. And this is like, this can be confirmed. Like this is one of my theorems that I'm trying to like develop, but this can be confirmed. Okay. But I trust it already. So I expect what? I expect a downtrend and some way half the line and opposite, an uptrend. So I expect the previous day to repeat into today. If there's no big news, right, which is likely what's going to happen today, I expect what? I expect some sort of like 30 to 32 interval move to repeat. But this move just happened. So this 30 intervals was canceling out something else. So I can't say a 30 move. I can't say something is going to happen relative to the same size. But if I look at the last support line, then I could say, okay, maybe Bitcoin is gonna come back and retest the support line. Because if the previous day was bearish, then today, relative to the previous day, is also going to be bearish because it's a repetitive market. But how bearish is it going to be? So the one day is bearish because the previous day is bearish. All right. But where is this bearishness taking us? Okay. Where is this bearishness taking us? It's taking us to the last support, right? Because bearish just means price is headed to support. That's what bearish means. Headed to last support. And bullish means headed to resistance, right? So simple. So if the previous day is bearish, the market is repetitive, okay, this is something I'm teaching you, then today's going to be bearish. If yesterday was bullish, then today's going to be bullish, okay? You can literally go look at the market. You find that I'm right 99% of the time. Only the days where there's inflection points and the market changes and there's market trend, that's when the market starts to switch and flip, okay? Like, doesn't become repetitive. So like yesterday is a complete opposite of today. That's an inflection point. But usually the market just kind of follows the trend. So if yesterday was bearish, today was bearish. The last 5 days was bullish, the next 5 days are going to be bullish, okay? Very, very simple rule, very simple thing that you're probably never going to learn anywhere else other than me, okay? Previous day, bearish. Today, bearish. Very simple, okay? I hope it makes sense. I hope you guys are catching on to the logic. So now I expect the one day to be bearish, but based on yesterday, it was like half, right? Halfway through the day, was consolidation, then it was volatility. So I expect it to be volatility and then consolidation, because consolidation, volatility, volatility, consolidation. And this is called the symmetry theorem, right? The symmetry theorem, the repetitive theorem, means that price usually repeats itself. The price is usually symmetrical, and symmetrical just means that it just kind of repeats at the same magnitude. Okay. So now that we have that understanding, now that we have the understanding that the price bounced off the resistance, 30 fractals of 15 minutes. That's 30 intervals, sorry. Yesterday was consolidation and then bearish volatility. So I expect today to also be bearish volatility plus some consolidation. The last 5 days were uptrend, so I expect the next 5 days to be uptrend. So that means that if the next 5 days are uptrend, that means that the price is going to move higher than where it dipped today or tomorrow. Where it's going to dip, it's going to move higher than 5 days. So that means that I can't take a short to swing below the low that I'm expecting. So the moment I close my short on the day trade, right? So I'm going to be looking for what? Based on this analysis, previous day is bearish. So next day will be bearish. Okay. Previous day was half consolidation, half. Okay, this is literally what I do, guys, every time I trade. Half volatility. Okay. So today will be bearish, half consolidation, half volatility. The last 5 days was bullish, so the next 5 days are likely to be bullish. We'll be looking for bullish moves on swing. So on swing trading Bitcoin, I will look for long off support. Off day trading Bitcoin into the next 24 hours, I'll look for shorts. Nice and simple, right? Okay. Now that we have this logic based on like learning from my lessons and like just watching how I trade and learning these things and learning that the market is repetitive right now, learning these things, watching this video in 2024 and being like, this dude figured out the market. All right. What do we do now to catch winning trades? Remember, I said on the high time frame, we're looking for bullish uptrend, long off support for a higher confidence trade. Does that mean that I can't take a short from here until support? No, I can. If I want to enter a short right now, I can, right? I can enter a short. I just have to find a nice time frame. And the time frame that I'm looking for is not on here, to be honest, right? So I'm not seeing a short on any time frame right now, except for this short one right here. So if we wanted to take a short here to support, what would make me take a short? What would make me take a short is where I set my stop loss. So for example, if I wanted to short, I would short right here, right now. Why not? Get in right now and just short it with a stop loss at the last high. This could be a good setup, right? This is for day trade. This is like if I wanted to trade right now, if I wanted to just get in, get a feel for the market right away. But obviously, this is literally like you're gambling your chances of whether this trade's going to hit or not, right? Why? Because it's a low time frame trade. So low time frame trades have 0% accuracy. No matter how accurate you put the chart. But the accuracy increases the more what? The more you look at certain indicators. This is where we're going to get into And this is where it's gonna get complicated. So the low time frame analysis is what? On the 15-minute, what is it? That we have a sharp rejection of resistance. We have 3 support lines that we're gonna try and retest, right? For bullish. So these are the 3 levels. So if I'm trading